It's time to review another stock using our software and Alpha Spread combined. Looking at the analysis, looking at the projections, where we see the stock going, some price targets. We're going to look at if there's any inside trading, who's buying, who's selling. We're going to look at the intrinsic value, the best case, the base case, and the worst case. Look at the balance sheet. We're going to look at the website and see what the company do. We're going to compare it to a back test, the S&P 500. Is it a good buy? Let's have a look at Farfetch. Okay, ticker symbol FTCH. And just to give you a little flavor of what's coming up in the next 10 minutes, I'm going to share with you quickly what we're going to look at. I've got some software here. We've run it through and we've got the information here, fundamental analysis, balance sheet, the efficiency, the margins. We're going to cover all this, the score, all of this in a few moments' time, the competitive landscape, the works, who's buying, who's not, and we're also going to take a look at the website. We've got the website up over there. We're also going to have a look at a full back test comparing it to the S&P 500. So if you want to know or you want to invest in Farfetch, this is the only video you need all in one place. So let's go straight back into the stock and have a little look. So what is Farfetch? Not everybody knows what it is. So we need to have a quick look. We're going to start very basic and get deeper and deeper as we go down the rabbit hole. Okay, so we'll start up at the top and we'll look at Farfetch. What is it? All right, here we go. Farfetch engages in the provision and technology and platform of luxury fashion industry. It operates with the following segments: digital platform and brand platform and in-store. The digital platform segment includes Farfetch Marketplace, FSP Browns Fashion, and so on and so forth. We don't need to read all of that, but we get an idea. It's a fashion brand. Okay. The CEO, José Manuel Neves. I hope I've pronounced that correctly. First thing you want to do is find out the CEO's history. Go and search him out. Type that in, see what he's done, how long has he been with the company, what's his success rate. Is he a good CEO? End of the day, he's handling your money. 5,000 employees, 5,441, so it's mid-size. London, there we go. Greater London, fantastic. Founded in 2007. High risk. How do I know? Maintenance requirement 100%, which means if you're using margin to buy it, it is regarded as high risk, which means it's extremely volatile. The people that trade this scalp it. It's all over the place. It has huge volatility. Right. So, okay, let's move down. Market caps, very small company, 541. Particularly, I don't like this size of company. I like $1 billion mid-size. And mega caps, I prefer. They've got more stability. However, these are the ones that can explode on the S-curve. What is the S-curve? You buy a company down here, it pops up, and then it flattens out, a bit like where we are today with Apple. It's flattened out. It hasn't got that rise or that Apple rise or the Amazon rise we once had. That's the S-curve. You're finding a new company before the S-curve. That's what you're looking for. Volatility, high today, 154, 52-week high, 1088. There you go. There is your volatility right there. That's a huge swing, right? We don't like that. It's not a dividend-paying stock. No stocks really are going to be like this. You need much more stability for a dividend stock, because how can you pay out unless you're making consistent profit? So this is a growth stock. You're buying this with the hope it's going to pop up and make some money for you. Okay. Now, we're not fan clubs. We're not joining a fan club. We're here to make money. Simple as that. Latest news, November the 10th, just a couple of days ago. Let's have a little look. Paris, Richmond labels are moving ahead with the transfer to their online business to Farfetch technology, which they are satisfied with. Okay, you can go into that Yahoo News. We're not going to do that on this review. Okay, Analyst. This is Morningstar. Bit out of date, August 18th. So it's a little bit out of date. So it doesn't really count that much. Things have changed since then. However, they're not saying it's a buy. They're saying it's a hold. But since then, it's come down, I think. We'll cover that in a minute. 57% say buy. The bulls say consumer data collection and analysis over time could result in better personalized merchandising, increasing conversion rates and consequently loyalty rates among consumers and suppliers. The bears are those that believe the stock's going to go down. For those of you who don't know, e-commerce may not reach the expected 35% penetration in luxury goods, leading to slower growth and poorer industry economics. So do you think that we are heading into an economy where people are going to buy luxury products? Okay, let's look down at the earnings. We can see the earnings. Again, the expectation set by Wall Street, the analyst, not by the company, is in the light, is in the darker color, and the bright color is what they actually achieved. So as we can see, it's been going sideways for quite a while since Q1 22, not really growing, not really getting anywhere. What is interesting is analysts had a negative sentiment towards it because they predicted it would drop when the company exceeded by a long way the expectations. That's interesting. I would want to know why analysts are going, you're going to come down here, and repeatedly 3 quarters in a row they beat it. Now analysts have thought, hang on a minute, we're misjudging this company. We've missed something. Let's increase our ratings, and of course if we beat again, then the price is going to go up. It's going to look very favorable. However, if we miss, analysts will drop it back down again. All right, so are we likely to beat this time? I wouldn't have thought so with the economy that it's in with this type of goods, but we'll see, because it's the next one is November the 29th. In a couple of weeks time, we could even do an earnings for it if we get enough interest on this stock. If anyone books it in for an earnings, maybe we can do it. Anyway, but right now it's going sideways. Now then, who buys this company? What sort of trader buys this company? Pinterest, rubbish, don't like it. Twilio, don't like it. Peloton did well in COVID, not so good now, I don't think. Shopify, that's interesting. Teledoc, bit of Cathy Wood there. Okay, gives you an indication. There's nothing too bad in there. Not really a fan of Peloton, to be honest, but there's not a Mullen or anything like that in that standing out, telling me that it's too extreme. Okay, let's go look at the chart. If we're buying it, ask ourselves, what happened here to drive it to here, and what happened here to drive it down here? Do your research. You can go onto the investment page of Farfetch, look at the history, look at the news, and try to find out what it is that drives the stock up and what brings it down. That could then tell you where to go in the future, right? Okay, that's the beginning look. That's the basic look. Now we move into a bit deeper. Next thing we want to do is we want to look at the website for Farfetch. I like to sort of get an indication of the feel and the flavor of the company. So let's go and take a quick look at the website just for a moment. All right, this is Farfetch website. Clean, very contemporary looking. It looks very sort of modern and futuristic. Menswear, let's have a quick look around. Okay, you get an idea. These are luxury products. Now, I've always believed there's always money at the top. Don't bother with money around the bottom. There's always money at the top, and that's proven pretty accurate over time. People cut back on cheap products, but people with money seem to always find it and buy expensive products. This is obviously, a high brand type of product. Anyway, let's now go back to let's go deeper into the financials now. Let's have a deeper look into the financials. And first of all, we want to go over to the intrinsic value. So let's go straight now into the intrinsic value. Now, we've got to be very careful. Some people get confused with this. If we do show a good undervaluation, that doesn't mean to say it's going to produce a good buy, because we have had intrinsic value traps. It's like a bull trap or a bear trap. It looks really cheap. It's not. You need to look at the extra information, which is why I'm providing this service, right? So let's go into the intrinsic value, and let's start with the best case. Best case scenario, everything's great in the world. We've just run this through. It's gone through an algorithm. How we produce these figures is it looks at the margin, looks at the balance sheet, looks at the debt, the competition, all of these things, and provides us with a valuation where we see the valuation of the company, and then where we see, if everything was right and the inflation was low and everybody was spending money, the best case, 86% undervaluation at today's prices. Great. Base case is what we regard the safe option. This is where we look at $5.06. We're currently at $1.36. It's undervalued by 73%. Great. And also worst case, 45%. undervaluation, worst case. Now, just because it's the worst case, that doesn't mean it really is the worst case, because clearly we're at $1.36. If the whole world thought it was that cheap, it wouldn't have gone to $1.35. Now, as I speak, it's still falling. So don't get too excited. I can report, though, there is not a valuation trap showing here. The software is not picking up and saying it's a valuation trap. So it could be a very good, undervalued stock, what Warren Buffett looks for. 265% on Wall Street uptake, relative value 79%, intrinsic value 45%. This is all good. Exceptional three-year return on equity. That's good. Positive gross profit, 1 billion. Okay, all looking good so far. We like it so far. Valuation history, you can look at the chart. We've already looked at it. Now it's showing a very, its undervaluation is exceptional in where we are now. So as you can see, it's the first time it's really glowing green to this extent. This is the time that if you was going to buy it, this might be the time to buy it. Fundamental analysis now. Let's look at that. $2.4 billion of revenue, which is down 0.3%. However, we are moving up. We are just down a little bit from the previous. December 30, 2020, we were 2.3. We're now March the 30th of 2023. March 30, 2023. And then if we look at June 29th, we 2.4. And then we start going into the next quarter. Estimate 2.5 billion revenue, and estimates now are trailing up, thinking it's looking pretty good. Okay. All right. Now then, 724 million operating income. That's down 4% over the last period. Operating cash flow, that's down 247.5 million, but that's an improvement of 30%. So we're moving in the right direction. Operating cash flow. Let's look at the balance sheet. This balance sheet looks a bit scary. This might be why it's so low at the moment. 3.5 billion on assets and 3 billion on liabilities. It's got some debt. Okay, long-term debt, 1.1 billion. Now then, we got interest rates we believe are coming down. However, this is expensive right now. For the rates where we are, this might explain why we are so low. 1.1 billion. That's quite a lot when your assets are only when your assets are 3.5 billion. Anyway, let's scroll on down and let's see what else we've got here. Efficiency of the company. Now, this is important. This is where we look at the moat. What's often described as the moat. If you've got a small margin and prices increase in this company, I don't know, labor costs or like wages or cotton or materials, whatever it is you're using to make the fabrics and so on and so forth. If that's going up, your margins get squeezed. You could have competition and so on and so forth. I'm not familiar with this industry. I don't know what a good margin is in this company. I would need to go and check. You too can do that. If you use our software here, I can provide you a link in a minute. You can use this software and you can go and compare other companies in the same industry and see what their margins are. And if this one has a particularly high margin, then you regard it having a decent moat and it's likely to be able to ride out the storm. It's not a bad margin, I think, but I don't know how it compares to other companies. It sounds pretty good to me for clothes and this type of thing, but I would need to go and check. Right, this is where it gets a bit difficult though. We've seen how much debt they've got. So what we've got here is a profitability score. Profitability score is to do with the margins. They're obviously quite good. 41 is amber. It's not red. It's not green. It's somewhere in the middle. It's not too bad. Anything above the 40 is okay. They're making profit. We'd like to see, you go to Amazon and you go to Google, you're up to the 90s. Hence, but we're not there, but nevertheless, we are making profit, and that's not too bad. We are in a difficult time right now, okay? Things aren't perfect. This is what worries me. 25 solvency, I think, is about the lowest that I've done on any of my reviews so far. In other words, its debt is increasing. Its high DE is increasing. This company could go bust. Is it likely to go bust in the very, very short term? No, 25 isn't zero. It's not 1 or 2. However, that's very low. It's the lowest one I've seen. Interest rates are going to come down, but they will stay high for maybe another 6 months, 12 months. They might not come down. They might just stay where they are. I do believe they're not going to go any higher, but this could punish the company. I don't know if I'd want to be in a company that has such amount of debt for such amount of time when they're not making enough money to cover those debts. It's getting pretty tight on the solvency issue. I don't want to buy a company that's likely to go bust. However, you are rewarded for that if you can hold on, because analysts do give it a good rating of 889% upside at $13, $265. I would have said really I would be looking at somewhere round about the $2. This is 152 in the current price, in the current market, with the way things are. I'd be looking at maybe a 20%, a 15% upside around about the $2. And then you got to ask yourself, I might as well buy the S&P, get a dividend, reinvest it with no risk. Why would I risk this? Is it the best use of my money? So far, nothing tells me it's the best use of my money until I've done research on why it popped up and down on those charts. Also, how it compares in margins to other companies, and a deeper dive on that balance sheet with that debt. I would have said it's not worth the risk. I can find a better return somewhere else. Okay, you can see who the competition is: Deliveroo, THG, Auction Technology, Moonpig. There's just a few that, again, you can go through and see. Let's have a look now. Are insiders selling the stock? Have we got any latest news on excuse me. Have we got any latest news on Farfetch? This is 2 months ago. We'll get a little bit of a flavour here. Let's have a quick listen in. It is 2 months ago, but we'll get a flavour. Let's have a quick listen into this. See what we have here.
This one, an interesting company, a fun one to keep tabs on here. One of my favorite.
Not fun if you're long the shares today.
Yeah, I mean, the fun is an absolute value, I guess. Because it's enjoyable to talk about.
I have to say, these two guys, this guy and lady here on Yahoo Finance, they're on Yahoo Finance. This is why I rank above them on Alpha Spread. They are supposed to be professional analysts. I think that. I mean, I know. I've always said I'm an entertainer and I'm just here to give my opinion. But these two guys, they never say anything of any use. They waffle around. They read scripts. They don't know what they're talking. These two make me laugh. I have to say, these two have no idea what they're talking about, and you can see it. I mean, let's just listen to that again.
About when there's a lot of.
Fun if you're long the shares today.
Yeah, I mean, the fun is an absolute value, I guess. Because it's enjoyable to talk about when there's a lot of moves. However, here we're taking a look at one of the moves that is downward-facing dog for Farfetch, lower by about 38% here, plunging after the company's revenue came in below expectations and issued weaker than expected guidance. Yeah. The company was also hit with downgrades from JP Morgan and KeyBank on the back of disappointing results here. And there you're taking a look at some of the actuals versus the estimates and I guess a mixed bag in terms of the adjusted EPS not being as bad as it could have been, but still a loss here. And this is a particularly timely conversation. The Farfetch Chief Financial Officer saying, interestingly, they're pleased with the second quarter performance, demonstrating progress towards delivering profitable growth, positive free cash flow in 2023, digital platform performing well, returning to growth while maintaining a stable order contribution margin. Compare that to the conversation that we had with StockX CEO Scott Cutler earlier this week, who we put the question to just about where they're seeing moderation and perhaps some of the prices that consumers are willing to pay, especially within that kind of resale or circular economy where people are listing high value goods in a marketplace style. And Farfetch is one of those major players. And as you think about where consumers are even being more discretionary with their dollars, that high value and luxury purchase, especially for kind of the mass market that a Farfetch or that a StockX even.
I mean, that's essentially what I was saying earlier. I think it's the wrong time for this type of market at the moment. They're not really adding anything there, so we don't need to worry about that. Let's have a little look. There does not seem to be any information on any inside trading with the company. There's nothing reported there. Doesn't mean there isn't, but we're not showing anything there at all. So I cannot report what we do not see. Okay, now finally, let's go. If you're still hit with me, I hope you are, please click subscribe and ring the bell. I'm going to give you a discount in a minute, a discount code, how you can get my software here at the best price that anyone can get it anywhere in the world. We have got the very best price on it, right? That's a promise. Let me share with you now, if we're going to buy and if we're going to invest in anything, as we bring this review to a close, we have to compare it. We have to compare it to the standard, the S&P 500. So we put $10,000 on my hard-earned money in here in 2019. Now we've got 847. You wouldn't be very happy. No dividends, gone down if you bought it at the beginning in 2019. However, if you put $10,000 in the S&P 500, you wouldn't have that blue line volatility, which is what Farfetch is. You wouldn't have all of that, but what you would have is $18,113 without any stress or drama. Again, we saw this on the chart earlier. What was this moment? What did this resemble? We can find out because we can go to the company website, look at the financials and see what events were surrounding this occasion and what surrounded here and brought it down. So for me, right now, it looks cheap. It's not a value trap. It's not that bad. It does look good. Margins are okay. We've got to compare to the market. So we need to sort of do a bit of research and find out what the market's margin is in that industry and have a quick look and get an idea of how it compares. But the debt is too great. Rates are coming down, but they're going to stay up for a while. They're not going to get any more. Can the company survive? There's too many red flags here. Just because it's cheap, there's other things that are cheap. There are other things that are down. You are a scalp trader. You get some news. You pop it on earnings, maybe. It's not one for me. So I'm giving it a no buy, I'm afraid. It's not a buy for me. However, you might disagree and think it's worth a go because it's cheap. I tend to buy value, and I don't mind paying a high price for a quality product rather than cheap and cheerful and hope for the best. For me, it's not a buy. If you want all my links, my newsletter, my X account, all that other stuff, the links, how you can get 10% off Alpha Spread software. The link is above my head. Everyone can use my referral. However, if you do, and it gives me a small little bonus to support my channel and providing these reviews. It's how I pay to do all these reviews. I get a little bonus for doing the reviews if you use my referral code and sign up. However, if you're one of my members to my channel, you'll get a 10% discount by looking for the members video up here and down in the description, and you will find the members video where you can members only will see a code that you can get 10% discount, which essentially give you my membership for free. Go over here, you'll see more videos. I'll put the membership video here so you can find it easy if you want the discount. Or over here, I'll put more videos that I think you will find interesting, and we'll review Farfetch again after earnings and have a look at it. We may even cover the earnings if one of our members selects it, requests it. That's it. That's Farfetch. I hope that was of use to you. It's not one for me, but until next time, as always, take care of your money, yourselves, your crypto, and each other.